Hello, everybody. Jim Malone here, coming to you live from Dallas Trading Floor. It is a Wednesday, and it looks like we may have seen a little bit of a pullback on some of the stocks. So it's it's an interesting. I think that going into this election, it just seems to be running out of gas, and we are in a uptrend under pressure right now. So be very careful with any new buys or anything like that. That you're going to be banking. It's just time to, possibly hunker down a little bit. I did, and here I am. I did my one buy this morning, kind of an interesting one. It's an old favorite, one that you probably have heard about, Tuperware, and I actually had a buy on Tuperware, which is very unusual for me, but it definitely it definitely was in the buy zone. So it's just that's the kind of thing. Sometimes when you get the right thing, you just go for it. So here we go on some of the slides. Basically, what's happening here is the market is basically under pressure, and we've fallen below. We've definitely fallen below the 50-day moving average. So it's a very kind of precarious situation. We don't want to be really, putting any more capital on. I basically took two positions off. One in Viva Systems. It wasn't performing as well as I'd like to have. And then I also, I'm also moved out of, let's see, what was the other one? Taiwan Semi, which wasn't up to snuff. So I got rid of those two positions. I did move into Tuperware only because it had some very interesting things going on with it, and I just kind of want to show you that. But first, I want to show you the Spider. And of course, this is the world's largest ETF, and many people have their entire retirement or entire investment in here. So it's a very important one. This covers basically the S&P 500, and it's weighted as to the value of all of the stocks in there. So it is pulled back, and I want to show you this. This is very significant. There is a cup with handle formation, which normally would be a very, very bullish sign if it moved higher, but it didn't. It moved back way down, and as you can see, it pulled way, way back below the 50-day moving average. This is not a very bullish signal. This is a very negative signal, and that's just one of the reasons why we're in a market trend under pressure, and that's very, very important. There was also pretty strong volume on this, so at least going into the election, it looks as if we're in a situation where the market may be pulling back a little bit. So we want to be a little bit careful. We want to build our watch list and possibly go from there. But it's not a good time to initiate new positions. It's time possibly to take, unless there's very specific situations, like the Tupperware situation where it did have a breakout on earnings. But we really kind of want to be taking a little bit of our risk off the table, waiting for probably coming to the election. I think it'll be a little bit more settled then, and it'll be a better time to enter positions. But right now, it is not the best time to be entering new positions. So we want to be kind of de-risking our portfolios a little bit now. This is the QQQ Trust, and this is mostly where most of my buys are in. They're in the NASDAQ 100, and that is what is represented by the QQQ. It is a very large ETF, and it contains 100 of the largest stocks that are traded on the NASDAQ by their weight. So this has Amazon in it, this has Microsoft and all the techs in it. But even it is pulled way back, as you can see. It did have a cup with handle formation too. Now, the Spider and the QQQ are very similar in terms of the way they trade. They do diverge a little bit. Typically, the QQQ trades above the Spider. That's one thing I want to show you. This is a rating of 85. This is relative strength. So against the S&P 500, basically this is a little bit better. This is about 35% better than the S&P 500. That's why most of my buys are in the NASDAQ 100, which is represented by the QQQ Trust. It's pulled back way back, and so we're going to see if this thing reverses. If it doesn't, we may be in a new downward motion, and that's a kind of a serious thing. Currently, we're at 273. The key level that is breached is 275. So we are moving lower, at least for right now, on the Qs. So it's time to possibly start looking at, trimming our portfolios a little bit. Now, with that said, here I am breaking my own rule and not eating my own dog food. I did initiate a small position in Tuperware. It did break out today. So you can see it has a relative strength of 99. That means it's in the top 100. That's in the top 1% of all stocks being traded right now. And I don't understand why there's such a good thing, but they did have excellent earnings, up 233%. So there was a huge breakout here. I did buy it basically as it moved above this threshold here, this 27.19. That's, even though it's not a pure consolidation, it is the threshold that you want to buy it. You want to buy it as it's making a new high, and it definitely is here. So that is in holdings. Of course, I do have a position in Tesla. It has been bouncing around. My average acquisition cost on Tesla is about $419 in all of my portfolio. So I'm down a little bit off of that. In terms of price at 410. Cloudflare, I'm also in that. That's been kind of sticking. That's been kind of sticking. I bought another yesterday. I bought a half position in that, so I'm a little bit. I'm moving into that a little bit. We'll see how it does. Qualcomm, I'm in. It's doing okay. The Greystone Betcoin Trust, and that's one of the things I wanted to talk to you about today. And I put out a TikTok video on that. This is a great way to possibly trade Bitcoin, and so this allows you the kind of the liquidity, so you can get in and out of the positions. Bitcoin before was very hard to trade. The thing about the GBTC, and it is going up actually, even though it doesn't show it here, is that it has a way to trade it very quickly in and out, and it holds about 4% of the world's Bitcoin. So GBTC on that, and then Tuperware, I showed you that as well. So let's see if I also just want to kind of show you, because we're on market trend under pressure, I just kind of want to show you how much we have moved down today. So this is an important chart. I mean, the Dow Jones is down. It's down about 3%. The S&P 3%. The NASDAQ about 3%. So we're basically off 3%. The Russell is essentially there, but the IBD 50, it's a little bit less. Now, what is the IBD 50? These are the 50 this is the 50 fastest growing growth stocks. So that's an important measure today. So we're about off 3%. It is not basically a good time to initiate new positions in the market. It's pretty much a good time to be to be looking at possibly trimming some positions out there and possibly getting into more safety plays. All right, so let's see. Well, we got some people waiting. Thank you so very much for dropping by today. Mr. Sid is first on the list. I bought some VIX and TCA today. I'm up 10%. Awesome. That is, I'm down on Tesla. Yeah, I know what you're saying. Well, you know what? We're going to, we definitely have a situation where by the end of the week, we may be looking to some of those safety plays. There is one out there that I want to show you. It's called the SQQQ, and it moves against the Qs. Let's see how it's doing today. Persistent. Let's see if I can give you a good. Let me see if I can give you a good. There we go. There we go. All right. This is one that you might want to consider as a little bit of a hedging move. And this is the ProShares QQQ. It's up $2 today, 27.18. I may initiate a position on this one tomorrow. This is kind of a hedging play as well. Also, let's take a look at what Mr. Sid was talking about. And on the VIX, of course, this is the volatility. This basically is good when there's a start of the of a movement down. But you don't want to be this in long term as well. So that's fantastic, up 2%. TZA, let's look at TZA. Thank you very much, Mr. Sid. TZA. And this is a great way to hedge as well. This is 3 times bear, and it is up today. Big time. So, very, very good play there, Mr. Sid. Really like that. Yeah, it's definitely moving up, and it's up $1.11. Again, the other similar play for this is a 3 times bear shares. It would be the SQQQQ, and this basically moves against the Qs, which is the Nasdaq 100, and that's up about $2. So those are the two kind of ones to look at here. Would be the ProShares Ultra Pro QQQ. So at least for today, or probably going into the week, maybe into the election. So very, very good. Thanks for Mr. Sid. Okay, and TUP. Or 4 times. Yeah, I think Tuperware is a buy. By the way, I did have it. I bought a little bit for myself, just in my small portfolio. Just wanted to show you that. And my small portfolio has changed a tad since yesterday. I did sell off a few things. So Tuperware, I bought in at 28.27. It's 28.59 as we speak, so it's off a little bit. But I do think the chart is quite good on that, and it may be making a run. Housewares typically do better in the end of the year, and it's definitely in that category. So let's look at the chart for Tuperware. TUP is the symbol, and this is as you can see, we had a gap up, and this is the live chart on it that we're seeing here. It's got a relative strength of 99, and it has some very strong I moved into it maybe a little bit too late, but $7.41 up today off of a $28 stock. That is amazing. That's a 34% gain. Basically, it's a gap up, and I do think this shows potential strength in the future. So let's kind of look to see, as we can, on the screen, to make sure that I'm not all wet on this. Let's see. There we go. Come on, screen. There we go. All right, let's look at the checklist. Ooh, well, it doesn't seem to be wanting. Yeah, I'm having a little bit of issue. There we go. 7 out of 9 on the checklist. That's good. 6 out of 9 is my minimum buying criteria. Let's look at the fund ownership here. And we've got increasing fund ownership, so that's good too. And so Tuperware is actually looking fairly decent. I mean, with this gap up, and you wouldn't have thought it, because I'm not normally a housewares type of guy. Yeah, I eat out a lot, and I don't eat in a lot, but a lot of people love Tuperware. I know my mother certainly did. God rest her soul. She loved it, and it may be making a money back. It's basically 59% owned by funds, which is really interesting, considering it's a consumer product. So, thank you, Mr. Sid. Very, very good. All right, so let's take a look at some of the people that have been holding on TikTok. Thank you so much. Okay, come back here. All right, Microsoft, cup and handle. All right, well, let's look at Microsoft to see if there's a buy point on it. I don't recommend buying this one before elections, because it's just a little bit tricky here. This isn't, unfortunately, this is a cup with handle. You are absolutely right on that, but you don't want to buy it here, because it fell off the roof here, unfortunately. So it's only got an 84 rating. I don't think you want to buy. In this at this time. Let's look at the weekly chart. See if there's an entry point on Microsoft. It just doesn't look like there is a cup and handle though, but it's not reacting the right way. It's selling off. I don't think we want to be in it right now on Microsoft. I think it's not time for Microsoft to be in Microsoft, just because it just doesn't seem to be handling it very well as we speak. So let's see another one. What are some good stocks to keep for a while? What are some good stocks to keep for a while? Well, it's really tough when you have a sell-off like this, and it's moving. It becomes more difficult to be in stocks. It just does. And unfortunately, right now, it seems to be more difficult than others. You could possibly, at least for right now, there we go. There are some stocks, indexes that might be good. One of the ones I like is kind of a protectionary move, and that is the GBTC. That's the Greystone Bitcoin Trust. GBTC. So let me see if I can pull that up here for you and see if I can give you a chart on that as well. So that one might be, at least going into the new year, that one might be something that you could buy in this kind of a market. We do have a cup and we do have a buy point on the GBTC, which is really interesting. The cup is and the buy point is 1478. Let me put that on the chat. But the GBTC buy point is equal to about 14. I think 1478 is what I said there. Yeah. Okay, 1478. 1478. Okay. 1478. I'll put that out there on the chat. This is a cup buy point. So it's a good buy point on this one. There is increasing strength in this. This is still a little bit more speculative, but it does have a relative strength of 92, which is pretty excellent. Now, because this is an ETF, we don't use the same criteria to buy an ETF as we use it on a regular stock. So there are some checklists, but it's not going to be as comparable as it would be on the in another way. But even with that, even with that preamble here, it's still 6 out of 9, and that is good enough for me. That's my minimum to buy to buy a fund. So 6 out of 9, and it does have a cup formation with a buy point. So that might be a good way to go if you were going to to be in something for a while. Now, in terms of a in terms of a strategy, if you just want to buy and hold for a while, there is a good strategy, and that is to buy the QQQ, but only when it's in a confirmed uptrend. Right now, the QQQ is in a uptrend under pressure, so we don't want to buy. We don't want to initiate any new buys right now. So it's kind of tough to enter the stock right now. It's time to sit on cash a little bit, wait for the opportunities to come to us, and that's the way to go here. So, just kind of wanted to put that out so that that you could get that idea. Okay, Katrina, thank you. FOBO, is that FOBO? Let's look at FOBO. BU, I'm sorry, FOBU, excuse me. Oh, not found. Maybe it's FUBU, right? Is that right? No, I'm sorry. FOBU. Let's see. I'm sorry. FOBU. Let's bring that up. Okay, not recognized. I'm sorry. I don't see that symbol. Sorry about that. Apologize. Buy point for Etsy. Okay, let's look at that. ESTY. That's been doing great. It's kind of a Shopify. Wow, weak as that one. I just seem to be slow on my machine here today. Maybe not enough bandwidth. Let's see if I can give you a buy point on Etsy here. All right. There we go. I think I'm getting back now. A little bit of a bandwidth issue. There we go. There's Etsy. Thanks for holding on. So, let's kind of take a look to see where there might be a buy point. There's a cup, definitely. We've got earnings, though, coming up today. I don't think you want to buy it today. Let's wait till tomorrow. But the buy point on Etsy, 141.41. So it's 141. 141.41. So let me put that out there on the chat for the buy point on Etsy. ETSY buy point is equal to 141.41 on cup base. But I'm going to put the earnings are today, so wait till tomorrow. And I'll put that out there for the chat. So thank you for that question. That's a great question. Christian, I appreciate that. Etsy is very, very strong. Also wanted to kind of give you a rundown on it. It's got a relative strength of 97, so that's really good. And the checklist is excellent. So again, I want to kind of show you this. This is definitely one you want to buy, and I appreciate you bringing this up, Christian. This is a good stock. We've got 8 out of 9, so that's excellent. Let's look at the funds to see if they're moving up. See, we've got 777 and 897. Why do I concentrate so much on the funds? Well, what it takes typically to move a stock is for the funds to be moving into it. Retail investors just aren't big enough to move a stock. So we want to see stocks with very high relative strengths on the best patterns and where the funds are moving into them. That's definitely the case with Etsy, and it's an excellent chart considering this market. We have earnings today. We typically don't like to buy into earnings because even the very best stocks sometimes will pull back after earnings. As a matter of fact, they usually pull back after earnings. It's very unusual, and that's why I bought Tuperware today. It's very unusual for a stock to gap up on earnings, but they do. So I'd be a little bit careful on my Etsy buy here. I'd wait until tomorrow. Let's see how it reacts overnight, and then I think you may have a very, very strong buy, a very, very, very strong buy on that. So thank you very much for that question, Christian. Appreciate it. All right. Okay. Easy Bag Gavin. All right, Bobby. Hey, Bobby. Good to see you back again. What is really the ETF on Bitcoin is this thing I was talking about, this GBTC. And basically it holds about 4% of the world's Bitcoin. And that's why it's kind of a proxy for it. Now, I have a small position in the GBTC right now, and there is a buy point on it at 1478. So that is the buy point for the Greystone Bitcoin Trust. Now, why do I like the Greystone Bitcoin Trust? Well, the reason I like it is because it is easy to get in and out of, and it does hold Bitcoin. So this is a way you can put Bitcoin in your portfolio without having to own Bitcoin. The difficulty with Bitcoin is each Bitcoin is quite expensive, and so it's hard to sell fractional shares. You typically, through some of the coin companies, you get whacked when you have to move in and out of the stock. This is much more liquid, and this is a great way to be in Bitcoin. It's the symbol is GBTC, and currently it's selling for $15.24. It's up today 86 cents, and of course I've been in it for the last few days, and I probably will be adding to my position if it shows strength, and it certainly seems to be showing strength. I will probably be buying more of the GBTC if it exceeds $16 in price. Now, why would I not buy it when it's cheaper, when it's going up? Well, very simple reason. It has to show strength in order for me to be in it. Because remember, I'm just following along. I'm just like a little minnow that's following along on the big whales. And the big whales are moving in, so I'm looking to see where they're looking, and I'm looking there too. So if this thing goes beyond $16, I'm going to be setting an alert on it, which will basically tell me when that's the case, and so that is when I'll be buying more of it. I have a very small position in it right now, but it is something that I am very interested in doing. So I just set an alert on that, and so if I can figure out how to alert everybody else what I'm buying, I'm going to do that. I haven't quite figured out how to do that yet on my small portfolio. By the way, if you are interested in how I'm trading my small portfolio, it's super easy. All you have to do is go to my website, which is www.dallastradingfloor, and I'll show you a picture of that right as we speak. Okay, well okay, so it's up here on the home page. You just hit that home. There we go. And hopefully it'll work. There we go. All right. So it basically to sign up for the alerts on the how I'm trading right here, first and last name and your email address. Hit that submit. Of course, it's all free, and you'll go from there. There's also a lot of other good stuff on the home page. All the current YouTubes are there, and as you can see, you could just pump right over that if there's anyone that you're interested in. Hopefully, I'll have a faster connection There we go. That's the one that we're currently broadcasting on now. And also, if you are looking to become a better trader and you want to kind of, learn the canceling method, which is what I use, the best way to do that is to purchase this book. It's called How to Make Money in Stocks, a Winning System, Good Times or Bad. Now, also, there's another book that I also highly recommend called How to Make Money in Stocks, a Winning System, Good Times or Bad, Getting Started. So this is kind of like the Cliff Notes for the original book, but they're both by William O'Neill, and also the Getting Started is by Matthew Galgani. They're available on the website on the Learn to Trade bookshelf. So that's a good way to get started into CanSlim momentum investing. All right, so let's see. Spire QQQ for my Roth after the election. Good question. You know what? I prefer the QQQ on that, and the reason I do is because, and I want to show you this. That's a very insightful question. That's a very, very insightful question. Let's take a look at both of them. I'm going to show you first. I'm going to show you the spider, and I'm going to show you the relative strength on the spider. So here I'm going to pop it over to that on. Now, by the way, I know that you're watching on TikTok, but I am simulcasting this on the internet at youtube.com/Dallas Trading Floor, and this is episode number 162. So what's happened? Why would I pick the spider over the Qs? Well, the reason is relative strength. The relative strength on the spider is typically, it's in this case it's 69. But let's take a look at the QQQ and let's look at the relative strength on that. And I want to give you a reason why that relative strength is so important. And you can see this 85 on that. Well, that's better than the spider. Why is it so much better? Well, the reason it is because the QQQ typically holds technology companies. This is where all the growth is in the market. They typically do better than the rank and file S&P 500. Not that the S&P 500 is bad. It's just that the Qs typically do better overall than the spider. And the reason why is because a third of the shares that are in the spider are small regional banks, and they don't, unfortunately, do very well, especially in a low interest environment. So, answer to your question, long story short, is in your Roth IRA. Here's what you do, and you can outperform many of the hedge fund managers on Wall Street if you do this. And here's what you do. You purchase the QQQ when the market is in a confirmed uptrend. And then, if it goes to an uptrend under pressure, you sell half of that, keep half in cash, and keep along. If it goes into a market correction, and we did have a market correction earlier this year, and we just had one, we just came through. That's a drawdown of 10%. You sell everything into cash. And this way, if you do this on a regular basis, you will outperform the market because you will only get the upward motion, and you will eliminate a lot of the downward motion. And if you do this over a period of time, you will far outperform the market. Now, how do you know when the market is in a confirmed uptrend? Well, there's several ways. You could watch this show, but you could also go to investors.com, and they put on their front page what direction the market is trading. Now, you have to go every day, unfortunately, but it is definitely worth your time. And you can definitely do very well if you do this over a period of time, because typically the market will stay in one condition or another for a fairly long period of time. It's kind of been choppy as the last few days but that is what I would do if I had a Roth and I was going forward on that, is that I would be definitely buying the Qs over the spider, and that's basically the way to go about it. All right, so let's see. Okay, so we did that one. Let's see if FedEx and JD.com. Let's look at FedEx first. I think FedEx. FDX. Okay, so there we go. Come on, baby. And it should come up here in just a second on FedEx.com. And it's still cranking out there. Well, can we get it? All right. I seem to be very slow today on the uptake. There we go. We're back on. There we go. We've got FedEx. There we go. Okay, let's look at FedEx. looking good, but it's pulled back. And I hate to tell you this, it's down $23.39. So this is just not looking good, even though it has a high relative strength. This pullback, normally if the market were in a better way, I would recommend buying on this kind of pullback. But I just don't think that it's time necessarily to buy on this kind of pullback. I do think we're going to move down even further. It is just come through and it's up 60% in terms of profit. This is a typical chart of how stocks will trade after earnings. You think, gosh, the shares are up. It should be moving higher. Well, no, because this is a classic case of a buy on rumor, sell on news. This is why, if you're coming into a big earnings on a stock, you should always sell it the day before earnings, because it definitely pulled back. So that's definitely the case here. We made excellent earnings on it, but yet it pulled back. Ouch. So I wouldn't be looking at FedEx. Maybe if it turns, then I would be back in it. But I'm not going to be in it until it comes through earnings. I'm just not, because that is a way we're going to give up some of our hard-earned money. Now, let's look at JD. JD, of course, is one of the largest of the Chinese internet companies. It's kind of like Baidu and the other ones. Very good, relatively high quality. Let's take a look at it and see if there's any place to buy it. Yes, this actually is looking a lot better than FedEx. Kind of sad to say, but it's true based on the charts. It seems like it has pulled right back to the 21-day moving average, and there is a cup with handle formation, and the pivot is 85.39. Let me put that out there on the chat. The JD.com pivot is equal to, let's see if I can give you an exact pivot on that, 85.39. 85.39. There we go. Oh, JD.com pivot is 85.39. Thanks for holding on. All right, so there we go. That's the pivot on JD.com, and it does look pretty strong. So if I was looking at both of these, and it's got a 100% checklist, you know what? This is the one you want to buy. This is the one you want to buy, as opposed to Federal Express. You want to buy the JD.com, and one of the also the thing is we're fairly in front of earnings. It's pulled back a little bit. It's down $2.39, but it does look like it's finding some support at the 21-day exponential. So out of these two, I think JD.com is the one you want. Now, should you buy it right at this moment? I would wait on this one just a tad, because I want to see it start to move up again before I buy it. But out of these two, out of FedEx and JD.com is the one that is showing superior strength. Now, are we close to earnings? No, which is good. So we're buying it pretty far away from earnings. That's always good as well. It's got an earnings per share rating of 93, which is excellent. Group rating is excellent. Funds are moving. It's 50% fund owned, and it's just looking very, very strong. So that's the one. That's where I would go. JD.com over FedEx. So thank you for that. Very interesting. All right, Jim. Hello. The best time to invest. The best time to invest was 10 years ago. But the next best time to invest is right now. So we're not at the best time to invest. The best time to invest was 10 years ago, and but right now the best time to invest is right now. So do we want to put money in the market right now? Well, right now we want to be real bit careful, because we're in a market trend under pressure. And that tells us something, kind of what to do. So I'm going to kind of give you kind of the gospel version of this, of what what you're going to do, and when to do it. Well, the most important thing is that the market trend is under pressure. So we have a situation where we've got to be very careful about entering new positions just at this moment. So I want to kind of show you the screen. This is off of the Investor Business Daily site. and I don't claim to. I don't work for them. I don't even get any money from them, but I do think it's an excellent site. So basically, the indexes have fallen below the 50-day moving average, and this is very important. So when this happens, it's time to start de-risking our portfolio a little bit until there's another uptrend. I want to kind of show you. This is the composite. Now, this is different than the chart that I just showed you, which was basically the NASDAQ 100. This is the entire NASDAQ. There we go. Yeah, there we go. Okay, this is the composite. Let me just see. And as you can see, we've pulled way below this 50-day moving average. This is kind of a downward trend. As you can see, we've got a downward trend going on. So not a good time to be initiating new positions. And I'm trying to reduce my number of positions right now and go for more into cash. I sold 2 of my weaker stocks today. I did buy some Tuperware only because it was a breakout, but I am going to be reducing my positions going into this election because that's just what the markets are saying. All right, let's look at UPS to see if there's anything on UPS that we can possibly look at. UPS. There we go. Okay, yeah, it kind of fell off a cliff. Not the time to be buying UPS, unfortunately. Very good stock, relative strength of 93, but it has fallen way below that 50-day moving average. So we are well below that. Not a time to buy it. There's just a general sell-off in the market. I do believe that based on what I'm seeing here, we may see the market going lower. So we've got to kind of protect our positions. I'm going to be selling call options probably on my Tesla holds, and I may be considering selling and taking my profits in Cloudflare as well. So not a good time to be initiating new positions. If I was down more than 7% on this one, I would sell. It's 7 out of 9, so it's still very strong, but it's just not a good time to be entering positions right now. We are under pressure, and we probably will be in correction here shortly. That's what things are saying. So I can't be very bullish right now on UPS. Great company, just not the right time to buy it, I don't think. Netflix, NFLX, I've been a member for a long time. You remember those when you got the the discs in the mail? I've been around since then, so it just kind of shows you my age. Netflix has pulled below the 50-day. Not a good sign. It had excellent earnings, but again, just tactically not a good time to buy it. We're this is sort of, it's sort of catching a falling knife. It doesn't look good. We do have decreasing fund ownership. It sort of has. I think it's run its course for a while, and it's still got an excellent checklist, 7 out of 9. But I think that we've really got to. We've really got to look at this, very, very in a very big way. It hasn't started pulling back yet, but it's below the 50-day, and so I just don't think that it's a very good entry point for Netflix. Again, I'm being very negative here, but I just don't think it is. What do you think about Spotify? Okay, well, I kind of like Spotify. I did have this. I bought it briefly when it IPO'd, and then I sold it, and then I haven't had it since. I haven't owned it for a while. Spotify does have, they paid a ton of money to Joe Rogan, but it's pulling back. I just don't think, at this 276 level, I just think there are better places to put your money right now. It's got earnings in one day. Let's see how it does through earnings and see what's happening there. Is it a buy? Is it on the watch list? Well, 6 out of 9. And ownership is, it's okay. But here's the problem. I think that Spotify has the same problem that another stock had at one time, and that's Sirius XM. I don't know if you remember this, but they paid Howard Stern an absolute fortune. Mel Karmazin, one of the greatest agents, I think, in history, negotiated that deal. And basically, the stock never recovered. So I think that they paid Joe Rogan too much money. But if I were Joe Rogan, I'd be like, right on. That's a great thing. But I can't see it. I can't see it with Spotify right now. I think the price is. Let's wait on. Let's see how it does on earnings. It does have sort of an interesting. It is doing well, but there's Apple, there's iTunes, there's a lot of competition. There's Pandora, there's a lot of stuff. So Can I totally get around Spotify? No, I just to be a little bit careful about it. Just be a little bit careful. I do think it's going to pull back a little bit. Maybe if it pulls back, a little bit to maybe the 160 level, and then it starts to move higher, then I might be in it. But right now, it just doesn't seem like. It seems like it's having. It seems like it's kind of, the buy point on Spotify right now is 300, and it looks like we're pulling back from that. So I just can't recommend Spotify at this time. Should I buy Tesla today? Well, this is the one stock I make an exception on. I do think that that Tesla is sort of one of these kind of once in a lifetime stocks. That it's opening up a whole new industry, and it is in a consolidation. So it's not a great time to enter the stock. You're going to have to be a little bit patient on this. But this is the chart on Tesla right now, and it's pulled back to 406. So it may fall lower. I mean, there's an absolute possibility that it can fall lower. But we do have increasing fund ownership, and we do have very good criteria on the buying criteria. Now, what can I say about this? Well, it still has relative strength of 99, which is excellent. There has been a little bit of a sell-off, today, and that may continue. But looking at the pattern, let's look at the daily pattern. I do think that we're kind of, we are still trending. Now, we've pulled below the 50-day moving average, and a lot of things have pulled the 50-day moving average. I think that hopefully it'll find a little bit of strength here and start moving up. But right now it's been trending down. I mean, it's definitely from 465 down. It broke at 465. So the question is, when will that reverse? I don't know. I don't like buying a falling knife. I'm not selling any of my Tesla positions right now, but I'm also not buying any more at this point. So that's my non-committal answer for Tesla. All right, let's see about the next question from TikTok, and thanks for holding on. Any take on Intel? Let's take a look at Intel. Intel has been very disappointing, and it's one of the great stocks, but every stock seems to have its day. INTC is the symbol, of course, for Intel, and if I get it in there right, it would work. There we go. Intel, and let's take a look at it. Yeah, just sad, sadness all around for Intel. This thing is a total sell. We missed on the earnings, and then it got worse. So we have relative strength of 15, just not where you want to be. We have 4 out of 9 on the buy chart, and the ownership it's holding pretty good, but it's still decreasing. No, this is just if you've taken a loss in if you've taken a loss in Intel, if more than 7 or 8%, time to sell and run away, because I don't think Intel. Don't buy the fallen knife. Don't buy a fallen knife. And as hard as hard as to believe, I want to see this thing reverse before I buy it. I just don't want to be a pioneer here. It's a great stock. It's not going out of business, but I don't think that I just don't think right now we've had solid declines in Intel since earnings. So it's just not looking like it's time to be an owner of Intel. I'm sorry to say that, because I love the company, but it is not the way to be. I think you don't want to own Intel right now. There's other better chip stocks to own. One I would recommend if you're looking for a chip stock is one that I own in my small portfolio. It's the only chip stock I own currently, and that is Qualcomm. And it's pulled back a little bit too, but it still has a better chart than Intel does, and that's Qualcomm. And it's got earnings in 7 days. So I'm probably going to sell this anyways in about 7 days, regardless. But right now, Intel just is not a viable stock. And it's kind of hard for me to say that, because I do really, really like the company. And, but it's not time to be in Intel, unfortunately. Let's take a look what's going to happen to Tesla with the election. Boy, that is the six. I think Tesla's going to continue to do well. And the reason is I don't think it matters which party gets in. I think electric cars are coming, and Intel is definitely in a position to take advantage of that. The reason I know this is because it is a fundamentally transformational company, all the other automobile companies are having to get into the electrical business because of Tesla. So I think Tesla will move higher. I am definitely a long-term Tesla holder, and I am in it for the long term. Now, that said, my portfolio is pulled back, just like everyone else's does. So I will probably be selling call options to see if I can, see if I can generate a little bit of income on that before the end of the year. So, I currently have a 450 call that expires this next month on the 20th of November. But this is a way sometimes if you're in a long-term position that you can protect your position is a stock that you want to hold. And I definitely want to hold Tesla is to sell call options. Now, unfortunately, in order to do this in a covered way, you have to have 100 shares for each contract that you sell. And that's kind of a little bit pricey on Tesla, but that's sort of how I go about it typically. But I do think long-term Tesla is going to be to be good. I don't know if I'd want to buy it today. I just don't know how that would be. So let's see if I go down here for the questions. Thoughts on PayPal. Let's take a look at PayPal. And I'm going to put that up right now on the screen. PYPL is the symbol for PayPal. And PayPal has pulled back a little bit, which is kind of disappointing. Here's the thing on PayPal. I did have it in a small portfolio. I got stopped out of it at 7% down, and I'm out of it. Unfortunately, it's pulled below the 50. I still love the stock. It's down $8 today, though. The whole market seems to be selling off. We may have what they call a distribution day, and it does have earnings in 5 days. So 93 relative strength. Would I enter this at this point? If when this thing goes through earnings, and if we have when the thing goes through earnings, and it's pulled back all the way, I think that may be the time. It's got a 100% checklist, and it has excellent on PayPal. Watch this one. Wait, and then I think that we want to possibly take a look at re-entering this one, at least for me because I had it before, after the earnings, which are basically in 5 days. So. It's still a great stock. I wouldn't buy it today. It's just the market is not in a position to be bought today. It's just the market trend is under pressure, and that means that that means that we're sort of in a little bit of a sell-off as we speak, and that is something that can be a little bit disconcerting. When that happens. So not necessarily a great time to be buying stock right now. I'll kind of show you how my small portfolio is trading, just so that you can see it, just so you can see that I try to eat my own lunch. I only have several things that are up. Cloudflare's up. That's done well. The GBTC, this is what I was recommending. This is the Greystone Bitcoin Trust. That's up today, too. It's moving very nicely. It's moving very nicely. I'll probably move into this a little bit more. And, of course, Tuperware broke out, and I do have some Tuperware. I just bought this today. My Tesla is underperforming, let's be honest. But it's only down about 2%. So it's not down a lot. But at 407, that's a little bit lower than I'd like it to be. My acquisition price on Tesla is about 419. So not necessarily the greatest thing here. And my Qualcomm, it's off as well a little bit as well. This is down a little bit more. I'm probably going to be selling Qualcomm and going into cash a little bit more. As you can see, my largest position currently in my portfolio is cash. So that's what you do when the market moves into this kind of this kind of head fake, as you move more into cash. It's just one of those things that you have to deal. Okay, Workhorse. Let's look at Workhorse. Workhorse has kind of been, it's a cool company, but this is why it's so important to set. This is why it's so important to set stop losses. And I know people don't like to do it. They're like, well, it's pulled back, it's going to come back. But trust me on this one. If you have a pullback of more than 8%, you want to sell it because it could turn into what Workhorse is turning into. Let me show you the chart on Workhorse. Don't think this is very pretty. We are moving down, as you can see. If we draw a little line here, let's see if I can do it. There we go. There we go. This is the direction that Workhorse is following. So it's not looking pretty. I'm telling you, it's just not looking pretty. We had a 50% pullback today. It's at 1675. unfortunately, unless this thing regains strength, it's looking like it's going to pull lower. So I just wouldn't. If you're in a loss position in this one, sell this run right now. Sell it right now. Sell Workhorse right now, and then wait to see if it turns around. Because I just don't think. I just don't think it's looking good. It just the chart on NAS. This is one thing I just want to say. This chart is not looking good. This is a bad chart. I just want to show it to you. Again, as you can see, I've drawn this red line in here, but this is the trend. And the trend is it will be, by December, it may be below $10. So we don't want to be in Workhorse right now. It looks like Workhorse has made its money, and it looks like it's turning to the bad. So sorry about that. Market direction. The market direction currently is down. The market direction, thank you very much for that, Arnold. That's the reason why I changed the little symbol. This is something that I change whenever the market changes its direction. That's when I do change. I do put a little marker up here, and that's what I did here on the first slide. So let me kind of show you kind of why that is the case. As you can see, the uptrend is under pressure. That's a yellow arrow. It's an up arrow, but it really means basically to move a little bit, move into cash a little bit, because the market is changing. We could, depending on the outcome of the election, we could get a severe downturn. It's looking that way. If there's a Biden win, it probably will sell off. The market probably will sell off if there's a Biden win. We don't know. We just don't know, but that's sort of what the market is telling us right now, is that. So, and it looks like he might, so you never know. Okay, Snap. Let's look at Snap. Thanks, Arnold. That's always a great stock. Oops, pull that back. Let's look at Snap. Yeah, okay. Snap is looking a lot better than Workhorse. A lot better than Workhorse. Yeah, it just pulled up very nicely, up to $1.34 today with nice volume increase. Good volume here. This is a winner. 98 relative strength. Let's look at it. Oh, yeah. Yeah, this is definitely. Is it viable at this point? You know what? This is viable. This is a viable stock if you want to buy it. Now, I don't recommend going in as normal in a market under a confirmed uptrend. We would go in with a full position on this one. This is only right now in this market. You probably only want to do a half position, but this is a viable stock at this time. This is a viable stock, and it looks as if we are basically we've gone through earnings. We did very, very well in earnings. And it looks like this may be going higher. So Snap is definitely a good stock to be in. So thank you for that, Arnold. That was great. I'm not currently in Snap. I may put that on the watch list. And that is my thought on the market direction. I'm so mad I sold my Snap. Oh, goodness gracious. It was down 400, and now it's up over. Oh, yeah, it's sometimes so. This is one of the hardest things, is when you have a winner and then you sell it too early. It happens all the time. This is why you need to kind of have some mechanical rules, and these are the rules that William O'Neill put forth, and I think they're really, really good. If you're up more than 20% on a stock, it's a good idea to possibly sell half of it. There's one exception, and that is if you're up more than 20% in less than 8 weeks. If you're up more than 20% in less than 8 weeks, you want to hold the stock. But if you're up 20% on a stock, sell half of it, because a lot of times that will get you your capital. We do have a change in the market direction. The market is moving. Lower. So we want to be very, very careful right now. I have a question on the TQQQ. Well, this is an interesting stock. This is an ETF. There's basically two stocks that sort of are companions to each other. One is the SQQQ, and that basically shorts the Qs, And then there's the TQQQ, which basically goes long on the index. Now, in this environment, the TQQQ is not doing as well as the SQQQ. And why is that? Because the market is retreating. Anytime that the market is retreating, the TQQQ is not the place to be. And let me show you the chart on this, show you why I know this. Okay, here we go. We're pulled back. We're pulled back almost $15 on this one. It does have a cup with the handle, but it has failed. So that is not where we want to be. We don't want to be in the TQQQ. This stock is, if this market direction changes, then we want to be in it. But we don't want to be in it right now. And the reason we don't want to be in it right now is because it's likely to fall more. If in this kind of environment, the stock that we want to be in, the ETF we want to be in, if we're trading on indexes, is the SQQQQ. And let me show you the chart on that. And why would that be? Well, this is up $2.59, and it's only $24. So it's up almost 10%. Why is that? Well, whenever the market changes direction, fundamentally, the SQQQ moves up when the rest of the market moves down. So that is sort of the difference between the TQQQ and the SQQQ. And thank you very much for that question. WFC. Next, Waleed. Let's bring that up right now. WFC. Let's see if I can give you something. Wells Fargo. No, you don't want to buy this one. I know that everybody in CNBC is saying, "Oh, goodness gracious, you should buy those stocks, those bank stocks. Bank stocks in a low interest rate environment are death. Please don't buy them. We're in a deflationary economy." Now, why do I say that? Well, the asset values of real estate, commercial real estate, is actually going down, believe it or not. So in an environment like that, many of the banks make most of their money from lending money to either homeowners or to commercial developers. And unfortunately, the value of that asset is going down. At the same time, the interest rates that you can get on mortgages is at a record low. So what does that tell you? Well, that tells you that there's a squeeze. And because there's a squeeze, all of the financials are not a good place to be. You just don't want to be there in the financials. So I'm sorry to tell you that, but it's a good idea to move out of that sector right now, because at least for right now, until there's inflation, the banks won't do well. Banks do very well when there's lots of inflation. When there's deflation like there is now, banks do terribly. And that's exactly what's happening. Okay, check WEBD. Webo. Let me look at that one. Thanks for that question. This is from TikTok. It's WEBD. Right? Is that right? Okay, I don't have a symbol for that one, unfortunately. Web dollar. Oh, it's crypto. Okay, for the best. Okay, got it. Yeah, that's interesting. I think where you want to go is GBDC instead on that. Have you looked at the QQQ at all? Absolutely. We look at that every day, the first slide that we did, but let's look at it currently. Now that the market is closed, see kind of where to go. Yeah, it's fallen off tremendously. Unfortunately, we have a market that is changing its character. Yeah, and it's pulled back down. And if you'll notice on the candle, the candlestick is a wick on the top, and then it's the candle on the bottom. So this is going to pull lower tomorrow. There's no question, and it's looking like we're getting an increase in things selling. So there is, the market may move into a market under correction by tomorrow. So not the greatest thing that you think. What about Rite Aid for the future? Well, Rite Aid does do well in certain in kind of a stay-at-home market. It's doing okay, but it just really isn't where you want to be. I'm going to show you the chart. This is not a chart you really want to buy, because as you can see, we're going from a high to, let's see if we can get this right. Oh, okay, there. No, that's not working. I'm trying to get my little pen to work here. Oops. Yeah, there we go. Temporary pen line. Let's look at it. Yeah, it's just pulling down. Oh, there we go. Okay. Yeah, as you can see, we're pulling down. We don't want to do this. We don't want to do this. And it looks like Rite Aid just is not a buy. Save your money, buy something better. Um, buy something better. Let's look at Facebook. Facebook, I have done very well. I haven't been on Facebook in a while. Earlier, in the summer, I was buying Facebook, and it was doing very, very well. It is pulled back, but it's still trending up. So, and what do I mean by that? Well, as you can see, it is an upward trend. It has pulled back to the 50-day line, but it is still an upward trend. So this is still good, 267.67, but it's off $15 today. It's got earnings in one day, so you know what? I just wouldn't buy this thing. It's probably going to go lower after earnings. That's my take on it. It could go higher, but more than likely it's going to go lower. Well, I have wasted an entire hour of your time, but thank you very much for tuning in. And I'm here at 2:30 to 3:30 Central Time every market day. And by the way, if you are looking on will Amazon open green tomorrow? Don't know if it will. If it will open green, probably. It depends. It just depends on how earnings are. Try not to buy a stock and open. Try to wait about 30 minutes or so into the trading day, because it typically will settle down after that. By the way, if you are on TikTok, easy to get on the action trade alerts. All you have to do is go to my profile, my profile, hit that link. You'll be taken directly to the sign up page for the trade alerts. So that's a great thing too. And if you're on YouTube, would really appreciate it if you would like me on YouTube. I feel so needy having to say, will you like me? But please like me on YouTube. So hit that like button on YouTube. I will be in tomorrow, and until then, happy trading, and stay safe, and stay out of these riots, man. It's terrible what's going on in Philadelphia and those places. So stay safe, and I will see you tomorrow. We're going to be making some money, and I will see you on the